In this lesson, we will cover what a trend market is. Let's first cover trend following, which is one of the two styles of trading. The important thing to understand is that a trend begins and ends the same way. A trend begins and ends with what you call a change of character. So as you can see from an example, the red shaded area is where price is when it's not trending. It's in a range. It fluctuates up and down between two distinctive zones that it fails to break through. So basically goes sideways. Then you get one of these up moves that goes beyond the range and doesn't come back. The area marked here by the line is where we can see the change of character on this move. Then the trend commences. The trend usually extends a good amount and gives few distinctive pullbacks, which doesn't give people an opportunity to get on board. Once it reaches the top, it ends the same way it started, meaning there's some level it should form a range or a low, and it breaks that level and then goes in the opposite direction. That's a very basic demonstration on how trends form. Now let's look at it on a chart here where we can see the Nasdaq on an hourly chart where it ranged for a number of hours, meaning it went sideways, not making any prominent moves to the upside or downside. It then went up into a trend. We're breaking above this level, which is a change of character. Very few pullbacks, giving little to no opportunities for traders to get in. All the way up till the uptrend was done, moved a bit sideways, again broke this yellow line, which is a change of character again. And we moved on to the downside where we trended all the way back down. So to put in simple terms, trend following is not about predicting when it's going to start trending, but rather following the trend. Another term to stick by is the trend is always your friend. So you're going to develop a strategy that allows you to get on board anywhere within the trend to capture a portion of the move. You do not need to go along here, trying to anticipate a trend. That's where most people make mistakes and they lose majority of their money or their portfolios. Back here, we are still in mean reversion. That's not the time to be taking those type of trades. You must distinguish the two and know the difference. So let's look at it from a lower time frame perspective to show you this happens on all the time frames and it happens all the time. So here we have the Nasdaq again on a 5-minute time frame where we can see that price was in a range for about 5 hours. Then we had a clear breakthrough with a strong move to the upside, giving a change of character, and then trended up into a slight pullback, which actually ended up trending again. So again, when we get down to how to actually trade these, your job isn't to catch this big move. Your job is to understand this part of the move, what it is, and say to yourself, is there a probability of us continuing to go higher? Then identify that and catch the next opportunity to catch a portion of the move up, which in this case you could hop on the pullback if you identified it correctly, understood what it was, which would then allow you to hop on the next move up. Hopefully this video helped you to understand what a trending market is and how to find opportunities to trade in a trending market.